All right, everybody, I'm in complete shock. I was approached by an acquaintance. They asked me this specific question: will I lose money on my pre-con? Knowing what they told me, where the particular pre-con is, when they're taking the keys, completion, how much they paid, and all of that stuff, I will get into all of that stuff right here. And I wanted to make an in-depth video just to prove a point that they already lost significant amounts of money and that they will continue to lose money even if the market keeps rising. So to that, they said, okay, hold on a second. All I want is my money back. That's it. I just want my down payment and I want to be out. That's all they're dreaming about. But having said that, I think now we're getting into this graph right here after the bull, right? Like we get into the denial because everybody was saying, look, nothing will happen. And by the way, I made a video, one of the great videos that I did on this channel, by the way, explaining the entire graph. And I know that we were setting some new paradigms, some new ceilings at one point in the market. Congratulations, everybody. But then it's the denial phase. After that, it will not go down. People need somewhere to live. Yes, they do, but they also need to be able to afford where they live. You're missing that part. Now, we get to the denial market. We get to the now. You hear it. You hear it yourself. We're back to the normal. I'm sure you hear it everywhere. Your neighbors, convenience store guy, your Uber person, saying, nah, come on, guys, we're getting back to normal. Interest rates are feathering down. Exactly. So we're in the return to normal phase. And now, slowly, I believe that we're kicking into the fear mode. And after the fear mode, it's the stuck mode. So more on that, you can watch the video on the channel. But now let's return to this pre-construction occupancy phase, okay? Where they believe, and I cannot understand the lack of information, the lack of understanding how it all works, right? And I kind of sat down and I was trying to decipher it. And I believe at that time, when that particular condo was purchased was 2021, right? 2021, they purchased it for $600,000. So I will change the numbers a little bit. I rounded this number off. The whole point of this exercise is to prove that within the next 5 years, even if the market goes up by 5%, there will be significant losses. Never mind everything else that we will talk about. But I believe at that time right here, the mindset in 2021, it was just like the mindset of like, hey guys, we're lucky. We walked into a showroom. There was a beautiful realtor there. We signed the papers because there was a lineup. We waited. We got it. We're so happy. And you know what? Let that chill. Let that, deposit chill for a little bit. Right before the occupancy, you guessed it, we're going to sign it to somebody else. We're going to trade that paper quickly and we're going to make the money. And with that money, we're going to do something else. Probably get into more debt and all of that stuff. But that's maybe for another video. So let's break this down, ladies and gentlemen. All right, so $600,000. That means on occupancy, 20% down, we're talking $120,000. Now, what they're missing are the closing costs. I don't know. I'm sure those closing costs were explained, but they're kind of not calculating those losses, right? Everybody likes to multiply, multiply the gains, multiply the equity, multiply what we have won, but not subtract what we lost or what we have to pay in order to occupy. So 18% closing costs, and I would say 20%. This is rough math, okay? I'm just a messenger here. This is an exercise. It's not exactly, but this is roughly from experience what I have seen so far. So we're talking $158,000 in order to close on this puppy of $600,000, which, by the way, it's located an hour to to an hour and a half from Toronto, and is not in the favorite city of the GTA, and it starts with H. So you figure that one out yourself. Now, having said that, we have to actually apply for a mortgage. Now, when we apply for a mortgage, so a mortgage amount would be $480,000 on this beautiful condo. Now, $480,000, you're talking roughly $2,800 a month. But they seem to be forgetting more stuff. And the more stuff here is I tried calculating like a rough idea what that would look like. And I came to some numbers here. And the numbers are $300 for taxes and $500 for maintenance fees, which brings us to $3,600 a month. So that's what this particular investment or strategy or condominium, you call it whatever you want, okay, a trade, needs to fetch in order for you, and I have to take a red marker now, in order for you to be at zero, not breaking even. So what are you hoping in this scenario? So you're hoping to technically rent this particular puppy for $3,600 a month, and then your 20% down, which you have put, plus the closing cost, so altogether $158,000, needs to, hear me out, needs to make you money. So I don't know what your comfort level is, 5%, 10%, 20%, 80%, to some delusional people in this real estate market where we had that, you know, the greed and the delusion and the new heights. You know, they wanted to make 100% on their dollar, 200%, obviously, right? They were entitled to that. So looking at all of that, even with this, you are breaking at zero, right? And you're relying on time, market, interest rates, all these other elements in order to ride for the next, let's say 5 years, because I took that mathematical equation, to gain what? Equity, right? So that equity within 5 years will get you, I'll tell you in a second, principal paid over 5 years is roughly $54,000. So $158,000, renting it for $3,600 a month will get you in 5 years $54,000. So that's roughly $10,000 to $11,000 annually. And if you brush that into $158,000, what is that? 5%, 6%, 7%? And obviously you have a place, which seems to be somewhat reasonable. But hold on a second. Owners have a different idea. They want to obviously make more money. But now let's get into the reality. So let's erase this, let's erase the big zero, and let's erase the $54,000, which we'll get into. Now, the actual reality, let me take the green one, so that's the reality. So the actual reality, I wrote down here, based on the statistics, we will probably be able to rent this place, which is a 1-bedroom plus 10, for $2,300. Congratulations. So $2,300. So you are writing a deficit, which means a minus out of your pocket, ladies and gentlemen, of $1,300 a month, every single month. That doesn't mean that the tenant will not call you and say, hey, listen, my faucet is broken, my light bulb, I cannot sleep at night, can you sing me a song, and all of that stuff. Because I had tenants, I know how it is, and all of you watching, you know tenants, right? They're not sometimes as easy. Now, by the way, I'm not going to go into that rabbit hole where you have to pray every night in many, many different languages in order for that tenant to actually pay you. I'm not talking about that risk. I'm talking a AAA client that's just content living in that shoebox, okay, and for 5 years, and they will pay every single month. So I'm not talking late payments. I'm not talking all of that stuff. I'm not talking if you have to take them to LTB, but that's another video. So now you're writing all of that. Now the question that I had from these people that were actually shocked because all they wanted is their money back. They said like, look, we want to go to our builder or developer and we want to suggest something. And I said, what's that? What would you like to suggest? And we'll just say, hey, listen, we don't want the condo anymore. I know that the occupancy is the early 2025, like other 40,000 units that are coming for occupancy in 2025 and 2026. We just would like our money back, right? And you can keep the condo. Guess how that conversation will end from the developer side? Not a problem. We will sue you. Take your down payment and some more because they will not get you off the hook. Now, they did mention that it did happen to some friends. And I said, oh, really? It did? When was that? Oh, 2021 and the early 2022 or the late 2020. Oh, how did you know? Well, because the developers and the builders could sell that condo overnight and make a profit, right? It's the game. Everybody wants to make money. You understand that? So why would they leave you or get you off the hook? Because there's really no benefit to them, right? So they were kind of in shock that they're like, oh, we didn't know that. Like, we thought that's the last case scenario and they will just write me my bank draft money back. Oh my gosh. I'm like, are you kidding me? So anyways, so now let's get into some numbers. So I said, like, even if that was the case, even if they said like, look, we will give you the money, or if they, well, that's the best, which is, well, it will not happen. 99.9999% it will not happen. But let's say you lose that money. Let's say the developer says, okay, fine, I'll take your condo and you will lose your down payment of 20% and we'll call it square. They said, we don't like that, but I get it. But let's just assume that that is possible. How would that look like? Well, they said, well, we're going to lose a lot of money. I'm like, look, I'm going to prove it to you. If the market goes up by 5% every single year, if your rent goes up by 2.5% every single year in the next 5 years, you're going to be losing this much. So let me write it on the board. All right, so let's go step by step. So $480,000 mortgage. Now we take the red one. Where's the red one? Right here. All right, so principal paid will be 55,000. All right, let's just round it off. 55,000. Interest paid within the 5 years, it will be 113 and change, so $114,000. So principal 55, 114,000 of interest within the next 5 years. You follow me? Total, important, total negative cash flow. That means the next 5 years you will pay out of your pocket plus collect rent, and that with 5 years it will be 77,000 and change. So we can round it off to $78,000 that you will pay out of your pocket in the next 5 years. So the total cost over 5 years will be $246,000 and change, but let's call it that. Total cost over 5 years. So let's dig even further now. Now, that means that a total rent collected over next 5 years, total rent collected over next 5 years is going to be $145,000. Total negative cash flow over 70K, and the total cost what we said, over 240,000. Walking away and losing 120,000, even if that's an option, continuing for the 5 years, like just put that into perspective. The losses, the difference in losses is 119 and change. So $120,000. I have to write this big. $120,000 with all the factors involved. You keep it. You ride it for the next 5 years. We have a market that increases by 5% every single year for the next 5 years. You have a locked mortgage at 5%. You have a tenant that doesn't give you any trouble. You don't have any empty months within these 60 months. You will raise the rent by 2.5%. All of that stuff, right? All of that stuff will get you to lose $120,000. Now, when I'm speaking to experts, and I appreciate all of your comments, like there's like a lot of comments in my videos, and I love that, right? So I'm trying to find that rational answer, or I'm trying to learn from you guys too. Maybe I'm missing something. Like prove me wrong. Prove me wrong. What am I missing, right? 81% of total pre-construction investors today are losing money. 81%. And somebody commented, how is that so? Well, do you know anybody that's making positive cash flow today that bought a condo, within the boom, right? The boom market, like this graph here. I'm not talking here, smart money 2020. That's not what I'm talking, 2000. That's not what I'm saying. I'm saying here, right? So show me, I'll buy condos today. All right, show me. It's not possible. You can shrink these condos to become 250,000 square feet. They still don't cash flow. They still don't cash flow, right? Because too high. The cost is too high. Now we can open up the can of worms, the developing charges, government charges, this and that. I get it, but this person paid 600 grand, and now they have to either bite the bullet or they have to chew the bullet slowly within the next 5 years. So I could make this video so long because some of the questions, there are no stupid questions. They ask me some silly questions like that I could not understand, like how they did not know how this works, right? And they asked me like, okay, so if I take the money from my house, which is a typical question, and I know you guys know, right? So if I borrow against my home, like a line of credit or HELOC or whatever, I don't know, right? If they have that much equity, right? Like the $480,000, right? So can I do that? Absolutely, you can do that. But for some reason, they're thinking that there's no monthly payments associated with that credit because it's already in their home, right? The LTV, like loan to value, is like, okay, 80%, 90%. We can debate. It doesn't matter. Let's say there's enough money, right? But and they have to qualify on top of that. You cannot go and say, look, I have a house that's paid off and I want, like, let's say 80%. Let's be cool. I want 80% out. I want $800,000 in cash, in a bag, on a bank draft, whatever. Just give it to me. It's my house. I paid it off. I want that money. Guess what the bank is going to tell you? You want me to tell you what they're going to tell you? You have to qualify. We have to make sure that your income can support that credit. They're not just giving it to you because you paid it off or whatever. So I was like mind blown with all of that stuff and how they were not calculating maintenance fees and they were not calculating taxes and all of that stuff. But that's the reality. Within 5 years, even if the market goes up, they're losing money. So I hope you got something from this video. If you think that this video could open somebody else's eyes, just share it. It's very simple to share links from YouTube. So thank you all for watching. I appreciate all of your comment and likes and dislikes. That's fine. Like I want to learn, as I said. So if you want to learn more about this channel or topics like this, Please click on these videos and I'll see you in the next one.